Hello, and welcome to a new update from the Markets Middleman. Today is Wednesday, June 17, and I'm about to share with you my preparations prior to the Fed interest rate, which is expected to stay as it is, but you never know. So that's why I'm preparing some levels, scenarios, alternative for those scenarios, and all that comes in between. So as usual, starting from the DXY on the daily time frame. I spoke in the last update on the significance of these two relative equal highs since they were the high of April, and there was a buy side engineered just before this high over here, which was Monday's high. So within Thursday last week we saw how price raided Monday high, tapped into this April high, two relative equal buy side, and just went down. Now honestly, I have two options for the DXY. Option one is that we saw all of this as one price lag, and price could continue lower and sweep this sell side slash 4 hour fair value gap, which I will show you in a while. Let's call this option one, okay? Because this is gonna follow us throughout this preparation on EU and the rest of the assets. So let's take this as option one. What option one suggests is that this is the full displacement, and we're gonna correct almost 50%, fill out those previous imbalances, sweep this low, and then push higher. Now, in both cases, this is a protected low. Let me zoom in a little bit. This is a protected low, and price shouldn't close below this low. Why this low specifically? Because it was the last low created before price made another BOS. So this is the protected low in all of the options, all of the scenarios for the DXY to maintain its bullish outlook, especially on the daily time frame. Price should not close below this sell side. So it can wick below, tap into the 4 hour imbalance, and then push higher. In both cases, both options still have those two relative equal highs from March. Yes, from March are still open. So if you remember how DXY is trapped within this range for almost a year now. So since almost June, last June 2025, and right now we're in June 2026. So it's almost 1 year of just ranging price action, and all of this came after an aggressive push to the downside. So are we seeing consolidation before a breakout to the upside, or that was the high for DXY and we're about to see a break to the downside? So no one knows, and this is why we trade those levels one by one in order to avoid being stubborn on one bias and just not to wait a year and a half to take a trade. So this is just an overall outlook. So this is option one. Now for option two, I'm gonna scale down into the 12-hour time frame, and this is option two. Option two says that this is an independent displacement, and this is another independent displacement. Price retraced back into this consolidation over here, which noted as a 12-hour order block, created a low on Monday. And option two, in my opinion, says the following. Option 2A says that price could sweep Monday low and just displace from here, marking a change of character, and we're back bullish in order to target this buy side over here. This is option 2A. Option 2B is the following. Price just continue from here. This is the protected high. So if I see both ways, if I see a sweep and displacement, this is the protected high. If I see just price go up from here, I will wait for a retracement and I will be a little bit more conservative in order for me to buy since I don't see a sweep. But this tap into the 12-hour OB could be enough. Now note how, just to scale down into the 4-hour time frame, notice how this gap is not fully balanced yet, but on other brokers it was balanced. So I'm just gonna keep it open. Maybe we see some manipulation to cover the gap. This is why I want to be conservative if I don't see a sweep. Why? Because so far this is the protected high. Okay, why? Because this was the last high, sorry, created before price created a new low. Okay, so this is the recent BOS. So if I see price reaches here without displacing higher, it would still be a correction before another push to the downside. But if I see price goes up from here, consolidate a little bit, and then creates another BOS closing above this buy side, then I think that's it, done for DXY, and it's open for a continuation to the upside. So best case scenario, we see sweep for Monday low and then displacement. This will be the protected high. Then I will wait for a retracement back into this breaker slash fair value gap and continue higher. So I'm sharing all of the scenarios that might play out after today's news. So I'm not gonna be trading before the news. I'm gonna wait for the news to show me. If price is gonna run through Monday low, yes, those are very nice two relative equal lows. But I think if price wanted to go up from here, it would have respected this level and wouldn't want to create another BOS to the downside. So another break of structure to the downside could open up the possibility for option one, which is again sweeping this sell side plus balance this last 4 hour bullish fair value gap. So we could see something like this. If price goes down, a little bit of consolidation, I'll be extremely bearish on the DXY until this 4 hour bullish fair value gap, and from here, etc. I want to see price rotate and go higher. So I don't think there's any more possibilities for price. Of course, price can surprise us and do whatever it wants, but I mean, if price goes up from here, this is what I'm gonna be waiting for. If it sweeps and then go up, this is the protected high. If it runs down, I'll be waiting more in order to balance this 4 hour fair value gap. So I prepare myself with all of the possible scenarios, and just all I need to do after this preparation is just simply wait for price to show if I was right on any of the preparations or not. So I will adjust this based on what price show me. So once I understand this on the DXY, it becomes much more easier for me to trade on the rest of the assets, starting with the EU. Now, moving forward into the EU. Following up with option 1 on DXY, option 1 on EU could say the following, that all of this downside movement is just one leg that has finished, and right now we're going to correct all of this push to the downside. And for price to correct this, all of this leg to the upside, I have set some levels, which is those two relative equal highs of Friday low. So you can perceive this as Friday low taken, Friday high could be taken as well. Previous weekly high, previous weekly low taken, previous weekly high could be taken, and this external buy side over here, which is the protected high. So again, what option 1 suggests is that we see a full raid to all of those buy sides, liquidity reach this external buy side, and then continue to push down into those two relative equal lows slash this low over here from March. And if I take a Fibo level, I see that this area is engineered right between the 50 Fibo level and the 61 Fibo level. So it makes sense that price could actually manipulate higher, sweep this buy side without closing above it in order for price to continue bearish. Now, why I see this possible is simply because price couldn't respect the imbalance off of this last BOS to the downside. So we see a very clean swing highs, swing lows from price, but at least I wanted price to respect this order block without closing above this bearish fair value gap. So I will take this a little bit to the right side, and then I will extend this previous inverse bullish fair value gap. What happened is the following. Price on Thursday challenged this inverse fair value gap. On Friday, a little bit of consolidation. On Monday came and closed slightly above it. Okay, let me zoom in a little bit. Closed slightly above it and wicked extremely above it. So it's not showing that much of respect. Then I thought, okay, let's just respect the order block without closing above this bearish fair value gap. And yesterday, look where yesterday closed. It closed right above this bearish fair value gap. Now, all of this could fail and price could just dump lower, okay, taking into consideration option 2, which I will also note over here. But again, according to the swing highs and swing lows, usually when price doesn't respect the imbalance within a swing low, it goes on to hunt some liquidity. So this liquidity is those that I mentioned before. Now here's the thing. If price uh, with option 2 for the DXY, option 2 could translate on EU as the following. This is the Monday high. Okay, this is the highest point that price created during this week. So I wouldn't be surprised if I see a price sweep just Monday high and then displace lower. So for this scenario, I will show you on the hourly time frame. So we go into the 4-hour time frame. Let's hypothetically say that price just swept Monday high. Okay, first, this is before it sweep Monday high. This is the protected low. Okay, so if from here price just go down, if we close on hourly time frame below this low, then I will flip into bearish and I will use this as a breaker with the fair value gap to continue the push to the downside. Why this is the protected low? Because this was the last low created before we formed a new BOS. So this is the external low and this is the external high. If I see a close below this, I wouldn't trust it much. I will wait until a full close to the downside and then I will look for shorts. But if price swept Monday high, then I will take the protected low and put it at this low. And yes, we will follow the same principle because this was the last low created before price either broke or swept this last high. So I will wait for a displacement below this low and then I will use this as breaker to short EU at this level. So it's pretty simple. When you prepare for a price and you wait, it becomes pretty simple what your job is. So again, don't be trapped buying very high at this level. If we see a full breakout of this buy side and price maintained its bullishness, then I will be looking to buy EU into the opposing liquidity, those two relative equal highs. Again, BOS will take us to the weekly high until we reach this buy side, external buy side, the overall with option 1. But if I see price just either dip down from here, this is the protected low. Sweep for Monday high. This becomes the protected low. I'll wait a displacement from this low over here and continue the bearish momentum. So it's really like this is one of the updates that I'm not certain where price is heading based on the overall information, but it just makes my job simple and easy when I just wait for confirmation and wait for the full narrative to play out in order for me to know where should I place my next trade. So with that being said on the EU, I think also I hypothetically showcased almost all of the possible scenarios. So let's wait after the news and see what would play out. Moving forward into GU. Like honestly speaking, I don't like the price action on GU as much as I like it on the EU. Even though last week we had a significant trade on GU, which I prepared for here in the last update. But I mean, honestly speaking, the price action is a little bit challenging. Simply because it's trapped within an external low and external high. So there's not a clear view on price. But I have prepared a simple plan, which is the following. If you see that price on Tuesday took Monday low, so usually when Tuesday takes Monday low or Monday high, it usually target the opposing liquidity. So the opposing liquidity of Monday high is at the weekly fair value gap. So just quick snap into the weekly time frame, we see how price is trapped within this bearish weekly fair value gap. So Monday high is engineered right at the weekly fair value gap as a one more test. So with that being said, this is the protected low which I will show you on the hourly time frame. So again, same concept. This is the low, this is the high, this is the last low created before price broke to the structure to the upside. So if I see a full breakdown from this low, I will use those breakers over here, anticipating the next push down to those two relative equal lows, as if we're gonna have a total breakdown of this consolidation that had been going on since May. The trade that we had last week is around this level, but I will keep it until the trade recap. So I'm not gonna discuss this right now, but again, my plan, if price sweep Monday high, this is gonna become the protected low. This is gonna be the lowest point after taking this high. But if price just goes down from here, then I will be looking into those breakers over here with an order block slash fair value gap to continue the shorts. Now, with option 1 for DXY, then GU could go higher, right? If EU and DXY, if sorry, DXY went lower and EU went higher, this will definitely affect the GU. So if I see a full raid or full break of structure from this high, this could open the target to take this buy side again, or maybe probably balancing this 12-hour fair value gap, which I will show you in a few seconds. This one was the only bearish fair value gap not mitigated with all of this liquidity over here. So I wouldn't be surprised if the XY would weaken a little bit until it balanced the 4-hour fair value gap. I wouldn't be surprised to see a full blown for GU, full blown of the buy side, balancing the 12-hour fair value gap and then continue lower. But of course, it's very early to say so, but I'm just identifying the extreme levels. So as I mentioned, either a sweep and full breakdown of this low or just a breakdown of this low, retrace back into those breakers, and then we can work with the relative lows that are already created as a sell side liquidity. So with that being said on the GU, let's move. Last but not least is gold. And when I say gold these days, it's definitely on the higher time frame because there could be something going on with gold that is extremely important and extremely interesting at the same time. I mentioned in the previous update the potential for balancing this monthly imbalance over here after the displacement since last year. So there is still more room for gold to go to the downside, and this is very healthy knowing how aggressive price went to the upside. So there's not a single market that goes up straight line, and it was a matter of time when gold would start to retrace back down. I think there's still room to the downside. When I go to the weekly time frame, I see the following. These past 2 weeks was the first time price closed below this breaker on the weekly time frame. So we've seen this during June. So June was the first month where price could close below this level over here. And this level is important because this was the low or the level for 2026. So during this year from 2026, this is the first time we see gold closing below this level on a weekly closing basis. So it left behind a weekly breaker plus a weekly order block. Now, there's no guarantee that gold could go up here and then continue down, but this is an extreme strong level. So if I see just gold going crazy, I'm not gonna be trapped and just be buying from here. I will wait. If I see the weekly maintaining this level again and closing back above it, then yes, I'll be considering to change my mind and target those buy side over here. But I think this is the level that I'm watching for gold. Now, for gold to retrace back up, and why is it still valid to go down? Simply because of the daily time frame. I will show you on the daily time frame, but before I do so, I'll just consider that this was the first leg down, this was the second, and this was the third. And usually each time price retraced a good amount of percentage into the last displacement lower. So here we're talking about 61, almost 50, between 50 to 61. And if I take the same principle and take a Fibo level off of this high into this low, look where this level is at the 61 and 50%, between the 50% and the 61 Fibo level. So in order for me to see if there's still a potential to push lower, here's the daily time frame. And last Wednesday managed to close below the sell side on the daily time frame. Okay, and there wasn't a sweep and then a full displacement. There was no breaker. So the lack of breaker following up with this strong bearish POS tells me that there's not a single sign of a local bottom for gold. So I think this is all just a manipulation to the upside in order for price to continue lower. Now, talking about continuing lower is two options as well. First, from here, price can simply go down. It already swept previous weekly high, and this was Monday. So price could do something like this and just dip lower. Or if price goes down from here, I need to be convinced and see this daily fair value gap cut inverted in order for me to continue the push to the downside. But again, if today price managed to take this daily order block, it was a huge daily order block within a daily fair value gap. So if price makes something like this and then push to the upside, then yes, there is a potential to tap into this weekly order block. Look how many days price it was from, sorry, May 18 until June 1. So price sat within this level a long time before it broke in to the downside. And as the protected low, I think this is more than enough protected low for gold on the daily time frame. So if I see price goes up like this, close above this buy side, reclaim this weekly level, then I think gold would be bullish. But for now, I don't think price is bullish yet. Even though we have seen this, what it looks like a V-shaped retest because of the daily time frame and the weekly close below this level over here. So please don't be trapped buying gold just randomly. Okay, of course there could be some nice buying setups if price gave a clean structure, BOS above this level. But when it comes to this level over here, just take into consideration the weekly order block and the weekly level. So you could potentially have some space to trade until this area of interest, but just be mindful of where you are heading on the gold time frame or on the gold price, sorry. So again, watch out for Monday sweep. Don't be trapped within the hype. Maybe this is going to be a sweep and a continuation lower, or just wait for a full displacement higher. But I think to see a full displacement higher, I think price should breathe to the downside, collect some liquidity, and then push to the upside. So notice that I haven't dropped into below the daily time frame because this analysis could be translated then on the hourly time frame and so on. So With that being said, I hope that you enjoyed this preparation. I'm really staying on the sideline until the news play out, and more likely waiting the day to close until I have a clear vision. So this was my preparation. Again, let me know if you have similar plan, maybe something else that I haven't mentioned, and I hope to see you in the next update.